Hi everyone, delonewolf here. Welcome back to EVE Talk, your weekly look at the market in EVE Online. And the latest scope video was pretty damn amazing. We saw that the drifters are gathering a large force of battleships in a wormhole that we can't reach just yet. They are like close to a ring-formed structure or station that's really humongous. It could be a gate or something like that, but it looks like the drifters will be making a move. So obviously I'm hoping that this will be with a live event, and I think a lot of people are actually speculating that this might be like a new form of incursions, but instead of the Sanshire we could be seeing drifter incursions or something like that. Anyways, it's really cool. I love how CCP is continuing with an awesome storyline that has a lot of mystery and actual threat to us. So I think it's really cool. I love trying to follow up on all of that. But we are here for the market, and so let's get started on that. I will start with plex, and I will write down 1 minute 10 for that. And as you can see, plex has gone up quite substantially. The sellers are up to 863.5 million, the buyers 852. The reason for this is of course plex for good. So we went down a little bit. I think this was like, well, actually this is from a 1-year chart, so this is a peak at what has been like the winter release. Then we did see plex go down a stable period at around 800 million, but now we are going back up. At first a little bit on speculation, but I do feel that here at the tail end, actually you can see this at the tail end. You can see that we were trying to go back down. This was due to a big plex sale that CCP did, but then of course plex for good came in, and so now the price is going back up. So 863 million, it's still doable, but once we reach the 900 million and then we head towards a billion, it does become pretty damn expensive. But at the moment plex for good is probably taking over the plex market here. So what could be interesting, I think, is what is the multiple pilot training certificate doing. That one is actually following suit, but we are talking, yeah, 871 for the sellers, 835 for the buyers. You can see that the buy orders are a little bit below that, and I do think the margin between the bottom, the lowest prices, so the buy orders for the multiple pilot training certificates and the plex is actually the plex for good effect. And next up here we've got the pilot body risk scope certificate. That one, strangely enough, is managing to hold on at 160 million, and it's been there for like 3 months. So this is the one that's still moving against the grain, and I wonder why this is. While plex and the certificate to train multiple pilots have gone up in price, a little bit on speculation and due to plex for good, this risk scope certificate is still staying pretty stable. So my personal hope, of course, I do like to see lower plex prices, because I've actually been donating and I've also been using them for like a bit of a secret project, is that this actually means that after the dust will settle, that plexes will and the multiple pilot certificates, they will actually start to normalize as well, so that this is actually an indication that they'll not shoot up to the moon just yet. And I hope that the summer can actually help that as well a little bit, but I do want to keep an eye on this one, on the risk scope certificate, just to see if this can be a useful barometer for what the other two are going to do in the future. Anyways, that's it for like the plex and plex related market. Let's move on to some minerals, and that's at 4 minutes. I'll round it out to that. And we will start here with titanium, which seems to have finally stopped its ascent. Maybe I'll go for like a quick 6-month chart here. You can see that we actually went lower than 6 months ago to 5.2 ISK, but it looks like we're finally bouncing back, and I think then supply demand becomes really important. So let's take a look at that here. We still have a billion titanium coming in, 228 million, 160 million, 360. Here we have 286 million, 265 million. That's still pretty recent, and unfortunately this 500 million is a little bit older. So I'm seeing oversupply in the market right here. All of these are pretty recent, and that will still put some pressure on the price. Now the good news is of course that we do come off of a low, so we went from 520 to like 5 530, yeah, pretty much something like that, maybe even 535 almost for the sellers. And so it is actually normal that people try to take advantage a little bit of these slightly higher prices, try and dump some of their stocks. And so we could meet at like 530, I think. And if the market is big enough, if demand is big enough that something like this 1 billion can be absorbed by it, I think there is still a chance that we'll start to see sideways movements. I guess the other ones will have to show if that is possible. Let's take a look at the pyrite chart here. That one is also stopping after, well, really going down quite heavily in the last week or so. I'm going from 12.4 to 11.4 ISK, but it also does look like it's finally stopping. And over here we get 11.46 for the sellers, 11.18 for the buyers. Still a little bit of a margin in between those two. And then we still have 2 billion units coming in here, 33 million, 10 million, 99, 160, all of these less than a day old. On the buyers we've got 500 million here. That's not bad actually. Here we've got 100 million here. But that one is already an old order. So again, I have to give a slight edge to supply, so maybe a bit of an oversupply situation and a continued pressure on the price, but the chart is showing that we're finally slowing down, at least when it comes to the decline of the high-sec minerals. Next up, we'll take a look here at Mixalon, very similar to the pyrite chart, a loss per down in the last week or so, and then here we're finally slowing this down at around 44 ISK. Let's have a quick look here. 45.9 for the sellers and 43.34 for the buyers. And supply demand wise, well, you can see the latest orders here: 113 million, 37 million, 35 million. Here we're talking 5 and 10 million. So again, there is still oversupply, but at least the price is slowing down. And then here we've got Isogen. That one has been able to maintain a bit more of a stable price around the 119 mark, but you can see here there is still that pressure and we're still going down slowly. So let's take a look at supply demand in Isogen. 5.6 to 2 million, all of these are pretty recent, and then 1.7 million. Well, not that many anymore. And here we've got 10 million, 50 million. Look at that, that's pretty big order. So it's actually, the Isogen is the one that seems to be, in my reading of the mineral high-sec mineral market, it seems to be the one that may be just a little bit ahead of the other ones. It ended its downward cycle right here. Then it tried to maintain a price, so a bit of a more stable period here, still slightly going down, but it does look to me like demand maybe is starting to take over in the Isogen market. So we'll have to wait for a few more weeks, I think, to see if this actually also materializes in the other ones, or if Isogen is actually going to really start dropping as well. But I think it's a possibility that we will come into at least a more stable situation where supply and demand will finally meet each other once again, and we could end this downward spiral for the high-sec minerals that's been going on for, well, at least a little bit. Luckily, Isogen has been able to maintain a price of around 120, so I'm calling it a spiral because it's been going on for several weeks in a row, but it's not that drastic. It's not like we're losing 40-50% of the price or anything like that. But it is pretty interesting that it is happening. Look at this right here, pyrite. That's definitely looks a little bit like a death spiral, but it's still above where it was 6 months ago. And so titanium went well below that, but now it's already bouncing back. So I think that there is a good chance that we will come into more stable waters for high-sec. I do think I've been doing just a little bit of mining here and there, that I went from like 6.5 million for a full machina to like maybe 5.5 million for a full machina. So the high-sec miners have definitely lost a lot of their ISK per hour when it comes to mining, because of all of these mineral changes. Next up, we'll take a look at some of these non-sec ones. Let's take a look here at Megasite, but that was to be expected. Megasite is finally finding its price just above 2000 ISK, probably 2100, something like that. Yep, 2113, 14 for the sellers, 2081 for the buyers. So 2100 seems to be the price where Megasite is going to stay for now. Supply demand here, there's plenty of supply, couple of them, but everything still seems to be below like 1 million units. So I would say that this is also slowing down. People have dumped their stocks, and the market is coming into a more of a normal situation, because for these null-stick minerals, it is usually the sellers that have a slight edge when it comes to dictating the price. So the buyers, they're very opportunistic, but most people come to a trade hub, pick up megasite, bring it back to their place, and then start manufacturing stuff. I think that's how it usually works. So it is normal for these that supply numbers are higher than the demand numbers. But yeah, stable price for megasite at least. And here is then the Zydrine chart. Pretty similar, you know, maybe a bit of an overreaction in the Zydrine, heading towards 1600, 1500, even on the 5-day moving average. But we are settling at the current price of around, well, 1200, just a little bit above that for Zydrine. So again, let's take a look at supply demand here. Couple of older, no, actually they're not older, couple of bigger orders of like 2 to 3 million are still there. We are seeing buy orders of 1 million as well. But again, this is not out of line with the null-stick mineral, with more supply than demand. But overall, all of this looks decently active, and it looks like the price for Zydrine has been found already. So okay, this is the situation. I do think that for industrialists, this could be quite okay overall, because the decrease in price for some of the high-stick minerals, which is actually a big portion of any production, is quite significant now, and the null-stick minerals have found their new price. So you know your bottom line, you know whether or not your margins have really suffered due to all of the changes that CCP has done here. But I think overall this could balance out with a slight edge that the bigger the ship, the bigger the impact on the increased need of null-stick minerals, and so they may be going up. That's honestly my expectation of this. We'll see smaller ships, smaller production be pretty much unaffected, but the bigger the ship, the bigger the stuff you're constructing, the more minerals you need, I think the bigger the impact is going to be, and I'd give a slight edge to increased price. So let's take a look at that then. We'll move on to Tech 1 chips at 1210. And let's see what the impact has been. We'll stay on the 6-month chart. I actually do like to try and see trends. And here we can see that I would have put the 5-day moving average in like the first 4 months here at around 175. You can see that now we are stabilizing at around 180 for the apocalypse. So I think it is possible that this is due to the mineral changes that we've been slowly going up anyways, maybe a bit of inflation, stuff like that. But now this is going to really put the nail in the coffin. We may not see dives below 170 anymore on a bit of a price spike, a bit more production coming in, and then a correction of that. I think that we may find ourselves in a higher new normal, in a higher band of price ranges for the battleships. Next up here is the Caracal. We are seeing something slightly similar. The Caracal though is a bit of a weird one because it's very popular for null-stick fleets, easy to come in, buy a huge amount of them, bring them back to your station in null-stick and just go out and fly them. So this is why you're seeing all of these spikes in the Caracal. But one thing, the latest correction after a big spike did not manage to come back down towards the 10 million, 10.4, 10.5 million that the corrections tended to do previously. So this could again be an indication. If you look at the 6-month chart, on average we are definitely going up for the Caracal. Here is the Dominix then. I'd say pretty similar again. The further in the chart we go, the harder it is to see prices dip below 190 million. And so this trend here, I'm really starting to see it, but especially in the battleships. Here is then the Myrmidon. Oh my god, that one shot up quite substantially. What the hell was that? I guess someone came in and bought a Myrmidon fleet or something like that. Yeah, we're pretty much on low stocks here in GTA for Myrmidons. So I think if you have the opportunity to produce them, this is a good time to try to do so. Again, I do think that this will be pretty short-lived, but it is a battle cruiser. You can see right here at just before January that we had a price spike pretty similar to this one, and it definitely took a little bit of time for the market, for the industrialists to react to this, and so we have a bit of a higher price plateau right here before we do correct back to a more normal price of 50.5 million for a Myrmidon. After that, slight uptrend is visible, but now here we have another price spike because someone came in, bought pretty much all the myrmidons that were available. Here is then the stabber. That one, you know, stabber is just a cruiser, it's a bit smaller, and so the effect is not as visible right here. We start, well, I would say at 10.25 million, and here we end up at 10.5 million. So this is okay for a flat chart. You know, on 6 months the stabber hasn't really moved that much, except for, again, I think these are big entities buying a lot of stabbers, causing the price to spike. People come in with more supply because of this opportunity, and now we do have a correction below 10.5 million, and then we go back up a little bit again. But this feels normal and quite stable for the stabber. Next up we've got the tornado. Again, this is a battle cruiser, a little bit bigger, so we do see this slight trend up from like 62 to 64 million. Now the new band, probably 66 to 68 is where we'll start heading for the tornado. And then here we've got the Vexor. That's a cruiser again, it's much less noticeable here, 11.5 million. We used to be well below that, now again we're ending just above that, so I think this trend may turn out to be correct. Of course we'll need to keep a close eye on it, but still overall the impact seems to be pretty limited with all of those mineral changes so far. None of them are really behaving out of whack, and we're not seeing a huge trend in all of them across the board. So I think this is still okay for Tech 1 ships. They're still available at decent prices for everyone that wants to fly them. Next up, Tech 2. Let's see if we've got some trade opportunities. 1635 for that. And I think we'll try and go pretty quickly on this. Finally, the Basilisk going up just a little bit after reaching almost 175 million last week. Well, we're pretty much empty of it, so that's interesting. If you did buy a couple of basilisks below 175, you now have an opportunity to sell them close to 190 million. Of course, I think this is exactly what happened, and people are starting to dump some of their stocks right here already. But if you did risk an investment close to 175 on this slight leg down here, it could be a good time to try and load off some of these basilisks. Next up here we've got the Guardian, also finally going back up a little bit, so that's really good to see. Basilisks were close to, Guardians, I'm sorry, were close to 120 million, and now you are actually able to sell them, well, 126. So the big supply is still here, but at least the price is going back up slightly. So I guess there is a bit more demand for Guardians here at the moment, but I would not sell just yet at the current prices if you've invested in them over the last few weeks or so. Next up here is the Hound. That one is going up. That's nice because I actually did make a move on these covered up ships, so that's actually pretty damn awesome. Sellers are up to 17.5. I bought well below that. I think the chart was below 16 million right here, and now a move up on the Hound. Pretty good stuff. So yeah, I'm gonna keep them a bit longer. I think I'll aim for a sell at like maybe 19 million for the Hound. I actually think that 18 to 19 million is possible, and then I will have made quite a good purchase of Hounds. I think I bought them like close to 15 million or something like that. So this is looking pretty good for a 10, 20, maybe even 30% profit margin on this over time. I just need to keep a close eye on that. Pretty good to see the Hound actually breaking the downtrend that's been going on for quite a bit. Let's check out the Manticore. That one is still very low, but I did not buy any Manticores. The reason for that is it is still 21 million now for a Manticore. It's way higher than the other covered ups frigates, and so I'm not investing in the Manticore. The Nemesis though, I did do that, and I'm a little bit too late. I should have maybe kept a closer eye on that, but I had a sell opportunity at 20 million and I bought them below 18 million, so I can still try and sell them close to 19 million, which will be maybe a 5 to 6% profit. A little bit too early, but yeah, we did know that spike right here, so I'm really glad to see. Last week all of them were showing bottom prices, and now at least the Nemesis and the Hound have already shown that this market is still alive for trades. And if I'd kept a closer eye on it, I would have probably been able to sell Nemesis close to 20 million, made a decent 10% profit off of that in like in a week, less than a week. So it's good. It's already pulling back, you know, but there will be opportunities to sell when you can buy at the bottom, and right here below 18 million is where I actually bought them. So I think that this will turn out to be quite okay. Just need to keep a closer eye on it. Here is the Oneros, that is also finally coming alive just a little bit, but it is still well below 150 million. So I'd be careful. I'd say your buying opportunity is probably over. Maybe if you can pick them up on some of the buy orders close to what we are seeing here, 143, you could still make a good deal out of that on a future spike, but it does feel decently risky once again, because, well, that bottom of below 140, that's unfortunately gone. So that was your opportunity. Here is the Purifier then, again, knowing a bit of a spike. I'm really happy because I did take the gamble on these, and I bought several of them, probably close to 17 million or something like that. And now, well, it's going to be very short-lived. It seems to be a pretty active market, but I missed an opportunity to sell them close to 18 million. Here is a price point even at 19 million. So I'll wait. I think I'll hold on to them just a little bit, but the really cheap ones, that could be over as well. And it's really good to see that this market is still alive. A bit of a spike after really reaching a very low bottom for quite a while. Good to see. Next up here we've got the Scimitar. That one is still working on a bottom. So my next move, if I actually did make a bit of money in the last week or so, I may just go and sell and buy a couple of Scimitars. Honestly, 113 million for the buyers, where the buy orders are really drying up. So I may actually invest a little bit in Scimitars next, because this ought to come back when Gnostic Wars start to arrive. I can imagine. My theory on this right now, if we do see logistics come back, would be that with the entosis link starting to come, and we should really see the whole sovereignty change by July, we will see smaller fleets, more specialized fleets form, and then we will maybe see a return of shield fleets and possibly shield logistics or different types of logistics being fielded in different fleets, and then we might actually see a bit of a resurgence of stuff like the Scimitar, the Guardian, and the Oneros right there, who are actually on the 6-month chart pretty low, especially here the Scimitar. So I think I may make an investment in the Scimitar next. That actually sounds like a pretty decent idea. All right, next up, Tech 3 market, 22.30 for that one. And well, I'll just touch on the Confessor, but we all know that one is really stable with really big supply right here. Look at that, 160, 127, 143, 78. They're still coming in, still trying to sell just below the previous one. So you're actually able to buy Confessors for 37.5 million already. These are ships that are being flown a lot in faction warfare. They're pretty fun, pretty versatile. They have been nerfed a little bit, so the price is going down just a touch as well. But I think that this is pretty good. These tactical destroyers are quite affordable, quite fun, I think, as well. And so pretty good hit, and nice to see that the supply is here to make these ships that are used and lost quite often. That's pretty good. Next up here is the Legion chart. So that one went up and managed to be, I think, the exception that stayed on an upward trend last week. That one is stopping a little bit as expected. Let's see if the oversupply is here. It's not that big just yet, but latest two orders here, 17, 18 legions. The volumes of legions has gone up quite substantially, so I do think someone has been building legion fleets here, but the normal volumes are close to maybe 50 ships, maybe just a little bit above that. So just these two orders, which are less than 4 hours old, are like 3/4 of daily volume. So if this keeps up, then that pressure on the price is going to come in here. If these higher volumes don't manage to maintain, and I don't think that they will, then the Legion is going to start to go back down a little bit. Next up here, the Loki, which was the one that did not go up last week. It's going up this week a little bit, but 11, 14, 12, I'm still seeing really decently big numbers, and so it's very hard for the Loki to actually break out in any substantial and sustained way. I actually think that this will already start to stop pretty soon. You can also see that the volumes are going down again already, and so we'll be back to 140 million for the Loki pretty soon, in my opinion. Next up we've got the Proteus. That one is also trying at 160, but I feel that 17.5, all of these, yeah, the entire front page here is less than a day old, and that is again 10, 15, 17. This is too much, and this will put a pressure on the price to go back down. I think here's this Vapul then, still trying to find its price, of course the most recent chip, and it's already below 40 million, so you can actually fly and use those for a pretty good price as well. Right, here's then the Tengu chart. That one is actually going back down, albeit pretty slowly, and it's the oversupply here. 10, 8, 10, 12, 12, 9 on the latest one. Again, a full almost 2 pages of orders less than a day old. So Tengu oversupplied. The pressure on the Tech 3 cruisers is there. You really need some increased volume, some increased demand, some interest in some of these ships for these price spikes, and once that ends, then the price goes back down, and that pressure is back on, because there is more supply than demand in the Tech 3 market. And then for the extra product this week, let's say 26 minutes, we are going to take a look at the entosis link. Of course, it's something new. Entosis link, search, and this is pretty reasonable. I mean, the first ones were being sold at like close to 70 million, but we are already down to 35 million for a Tech 1 entosis link, and 127 million for a Tech 2 entosis link. Seems pretty affordable, honestly. It's good to see that production is happening quite decently, although of course it has very limited use at the moment. You can maybe use them on some Jove observatories to get something back, but CCP is planning to allow, I think it is station services in Nosek, to be attacked by the entosis link in their June release, and then they're shooting for the rest of the sovereignty mechanics in their July release, and both of those are pretty early. I think it's like in the first week of June and in the second week of July already, so it really don't have that much more time to prepare for all of these Nosek mechanics that will change, and the entosis link. But if you want some, you know, you can already like purchase a pretty cheap Tech 1 entosis link for 35 million, and a Tech 2 is gonna set you back 127 million. If you really want one, this is not something that is going to stop you from actually buying one and testing it out or preparing with these links. And I'm sure that there's plenty of local supply and production going on as well within the alliances. You know, they'll have a couple of people dedicated to preparing for all of this. So this is quite okay. I feel that the entosis link production, honestly, I don't feel that you need to step in there to have the latest item. This is a pretty small item overall, and I think that the margins will be quite low quite soon. So yeah, that's the entosis link for you. Although the Tech 2, well, it started at 220 million, which is not like the billions that we see when new ships tended to be released. So this is maybe also something that we could see as an impact of the new release cadence that CCP has developed here, that the impact of a new item, a new ship, is actually not that big. People don't tend to overreact and be willing to spend billions on a new ship. And of course, maybe everything that's been released now is actually more of a flow of new stuff that is easy to make, that people will want to use, but that doesn't have an immediate use just yet right now. And so all of this is becomes affordable quite quickly, is what I'm really trying to say. None of this is completely out of whack or breaking anyone's wallets if you want in on it. But this also means that as an industrialist, your profit opportunities are a bit more limited, I think, because of all of these new releases following each other up so quickly. The novelty wears off quite a bit more quickly, I think, as well. Anyways, that's it for this Eve Talk, guys. Thank you very much for watching, and I'll see you all next time.